Hey guys, so welcome to the eighth and final mentorship call. I'm Ollie.
And I'm Jamie.
So today, this is a call you've all been waiting for. We're going over the model, putting everything together you've learned and showing you the model, what we use, with the risk plan we've taught, all that good stuff, all put into the model we use. So this is the plan. So I'll start off, I'll go over two examples, run down the model and what it is. And then Jamie will go over his two models, two pairs as well, with examples. Right, let's share the screen. Hope you guys had a good trading week, by the way, as well. Had an FP today, didn't we? Um, that's one. I'm fine to pass on, aren't I?
Yeah.
US 30. Right. So big movement today, guys. So let's go over to yesterday to start with. I said add you quickly. Someone's trying to join. Right, we want the 5 minutes. Oh, right. So, firstly, let's run over what the model is. So, we've taught you about the imbalance, and we have taught you about liquidity. So, what the model is essentially we use both of them. So, it's liquidity and imbalance and impulse blocks all put together. So, you'll see in a second. The impulse block can replace the imbalance first. Before. And but yeah, let's get out with the first example. So here it is. So right. So how it's going to look, it's going to be like this. So you remember I taught you about an imbalance. We have one in here, if you guys can remember from the call, where we taught over this. So this is on a 5 minute time frame. This model does work on any time frame, doesn't it? Like
Yeah.
you got an hour, daily, week even. But obviously, when you go onto the week for liquidity runs, likes to run more pips than 10, 20, 30. It likes to go, it can go all the way up to like 80 more. So you want to stick to ideally anywhere from the five. It can work on the minute, but I'll say anywhere from the five to up to daily, 4 hour really, right? So you can see here, guys, we have that imbalance as we taught that wick, and this candle in here, this down candle. So I've drawn that out with the fib as usual. And then we drop from it, obviously. And what happens? We have. Oh, it's almost like chat.
I've done that thing again.
Oh, how do we sort that? Go on, Zoom.
Yeah. Can you close that?
Back to meeting.
Oh, yeah. Click on that. Sorry, guys. We're just trying to see a chat
Yeah,
at
we
the
want to see
minute.
your.
I don't know. It does this weird thing.
Does it work on any pairs? Yeah, any pair. Yeah, sorry, I don't know why the chat's been weird lately. We might have to update Zoom or something. Yeah, anyway, back to example. So yeah, any pair, guys. So I'm on the indices right now. Jamie will be going over some forex pairs on it. Yeah, it works on all.
Yeah.
Just have to be patient and wait for it. That is trading at the end of the day. You're not looking for lot trade after trade. You're looking to treat it as a business, as we've said, and find those positions when they appear, and stick to the model, stick to the plan, and stick to the risk. So what we have here. So I don't know if you remember, guys, as well. I taught you about the liquidity. It runs in 10 pips. So we have the previous high there on this wick. We then run that by, so that was, sorry, the high was at 20, it was 203, it's not sure, so 204, either way, it doesn't, yes, that's fine. 214, so runs it by 10 pips. Just like I said, liquidity runs in 10 pips, gaps of spaces of 10, so 10, 20, 30, etc. Because that's where most retail traders have their stop. As you can see, it's taken that high, ran liquidity, and it's came into an imbalance. So what we will do, we will have a sell from here. You can look, guys can be safe, go from the 50, even safer if you want to, like, not safer, but get more guaranteed entry as soon as it taps into the imbalance. or with this in this example, it lined up with the 10 pips, you could have got right 100%. So I'll just draw out the 50 for this example, just so you can see what kind of R2Rs you get on average without pushing it even further. Then obviously you have your stop above the 100%. In this case, I'll put it above that previous candle there. So 7 pip stop loss. And then for target wise, guys, you can have first target for that low there. So that would be down here, which you can see with a hit, that's a 1 to 9 nearly. You can get crazy R2Rs with this, guys. And then you can see after that, it took it, and then we played off an imbalance here, as you can see, and we came back up, still intact. Does the same thing again. You could then target the low down here. If you wanted to take partials here, then hold. You could then target had TP2, second TP for down here, which would be, if we're looking for these lows in here, that would be a 1 to 22, guys. The R2Rs on this are crazy. It's just a crazy strat model. It's not really known. Not many people, you won't see this. Like, no one teaches you the model either. At the end, they leave you just struggling. They'll teach you about, might teach you about imbalance. You might learn that somewhere. You might be able to find it if you can. And liquidity you might find, but they won't tell you how to use it and how to play it all together. And then we'll go over to here. Let me find the other example, guys. Here it is. So today, this was really nice. So people think the news just moves randomly, but obviously you guys know it doesn't, because we taught you this through manual intervention. That's what happens on news. So that allows the banks to move it how they like. But people think it's just gonna do whatever. No, of course it's still gonna news is gonna hit a certain points and play off it just like anything. It's not just gonna do its thing. It has a reason for everything in the market. So here in this case, this is a different example. So, like I said to you guys, sorry, I'm stowing. We don't have to use an imbalance. You can use a impulse block in replacement of the. So we're looking for an imbalance lined up with it, or an impulse block as well. So in this case, it is an impulse block what we're using. So here we have the low over here, and that was at 31,913. 31. This one ran it by 40. And then, yeah, so you guys get the point now. This ran the low, came down 40 pips below it. It lines up perfectly with this impulse block over here. Oh, let me get rid of that. Right, over here, just here, guys, you can see the impulse block. It lines up perfectly with that impulse block. Just there, as you can see. The wick comes down to it. I'll send it out, show you guys from here. And then you can see it runs from there. So in terms of entry here, guys, this would be a crazy trade you could have caught today. So entry on the order block, on the impulse block, and for stop wise, you would have it below that wick there, over here, guys, below the impulse block, and then again, target wise, target a pretty high up here, and already that's 1 to 9, and then that'd be a great trade there. Like personally, from there after it set that to that high, I would take there personally. Like over here, you can see there's a lot of movement down. There's nothing to say it's not gonna. There's a lot of stuff. It's not coming up here. I don't think, because that's a long way for it to go. You don't need to, and especially around a tight stop. That's a great move. You don't. That's like a great target to have. Especially with NFP. Personally, wouldn't trade it, but yeah, that's for the example with the news though. I thought that'd be nice to show you guys today. But yeah, so I'll just show you over the impulse block it lined up with, and obviously the imbalance over here. So I'm going to pass it over to Jamie to run over his two examples. If throughout the call, guys, you have any questions, just feel free to say, and me and Jamie will obviously go over it. But yeah, here we go.
All right, guys, let's get into it. So I'm going to show you the example on some Forex pairs now. So I'll get it up on EU for our first example. So this one was on the 13th. Oh, we got a chat. Again, it's not working.
Go back on Zoom.
Yeah. Can you show a trade you took this week? You want to show trades? You want to see? Oh, hang on, what have I done here? Yeah, so we're actually showing you. It'll be in the newest YouTube video. Actually, that actually works well. We'll actually show you a trade we took today on NFP. So you'll see that.
I can show you plenty of trades as well, guys. I've been running it up. I think I'm gonna do a video on it as well for probably put on my channel for YouTube as well. Um, I've hit the leaderboard on FTMO this week, so you guys can just see that if you guys want to. But yeah, that's how I've done that, trading this like this
Yes.
on smaller time frames, using exactly what we've taught you. So I'll be able to show you guys that as well, if you guys want to. But yeah, we can show trades using this during the week and stuff in the group. But yeah, I'll let Jamie get on with it.
All right, guys. So this one is on Euro USD. So we're on the 1 hour time frame here. So obviously this is a high time frame to the examples that Ollie showed you, just to show you that it can work on higher time frames as well as lower time frames. So this black line here, that is the full closure of this imbalance in here. Now, just because it's come down and hit it, it doesn't mean that this is invalid. Imbalances are still valid, even though it's come down and filled it in. It can still be valid. So we have this low here at about 60, yeah, 960, 680. And then if we have it there, so that's about 30 pips run on these lows in here, these equal lows. And then that 30 pips lines up with this full imbalance closure. So what you could do is you could go long position. So you could go long there, and then what you could do is you could have your stop just below. So what I'm looking at is I'm looking at the imbalance, and I'm looking at the wick just down here. So this big candle that created the imbalance, I'm looking at that low, just below that, just for some room. So about there. And then you can see, obviously, you could target this high up here. That was a nice high. That was a clean high. And you can see that was a 1 to 6. And then if you wanted to target this high as well up here, that would be the ultimate target. And that was a 1 to 7.4 almost. Oh, just move that. There you go. So that was a 1 to 7.4. So you can see these risks to rewards, to get funded with these funding programs, you need about 10%, I believe, for most of them. You can see just using this strategy here, you can find these trades, and you can almost pass the challenge in one trade.
Or if I use the risk model like we taught, people could start 2% out of that trade just there would have passed it over.
Yeah, that would pass you. And then obviously you can kind of adapt this model to how you want as well. So, when you move your stop to break even, you could maybe some of you could say, if this thing moves 10 pips in my favor, then I'll move my stop to break even. Some of you would wait till, the first target, and then you'd move your stop to break even. So that's the kind of bit that you can kind of make your own and how you want to do that, because that's going to be different for every single one of you. Because some of you can hold till the full target without moving your stop, and you would feel comfortable with that. And there'll be others of you that would, as soon as when it's here and it's just going into profit, you'd be freaking out like, I want to move it to break even already. Now, obviously, there's a time and a place to move your stop loss. You don't be moving it like literally as soon as it goes into profit, move it to break even. You don't be doing that, because obviously you're not giving the market enough time or enough room to move. But that's the bit that you can kind of make your own with this model. And I think that's one of the great things as well. So let's go over again another example. Oh, so it's over here. So this is on USD JPY, and this is a really nice one. So obviously, we've been saying, USD JPY is going higher. It's, really bullish. And so this was a buy example, obviously. So you can see we have these lows in here at 143.47. And if we come down, so it's about yeah, about there. And then you can see we have this imbalance in here, which lines up with that liquidity run in there. And you can see, look at the respect from that imbalance. And then you can see it runs from there. So again, I'm gonna put a stop that. So obviously, because this is such a small imbalance, I wouldn't be picky with, if you want to trade the high, the 50% or the 100%, because it's such a small imbalance, you wouldn't be fussy with that. So personally, I would just take it right at the high of the imbalance, just because you're going to get a feel then. And then if I move my stop. So again, I'm looking for the stop. I'm looking at the imbalance low right there. And then you can see first target could be this high up there, which is a 1 to 6, which obviously if you was trading the 2% risk on this trade, that'd be 12%, just over 12%, like 12.3%. And then obviously the ultimate target could be, this high here. And you can see it does almost get close to you. But then trade still is in play. And then you can see that's a 1 to 13.8. So you can see the risk to reward on these. You're not messing around with any, 1-to-1s, 1-to-2s. This is giving you, it's taking you straight into the marketplace. You know exactly what you're looking for. You know exactly when you're looking for it. And it's just beautiful. Like, it really is just beautiful. And it gives you these crazy numbers, which, there's a lot of people out there that they claim they can do it, but they never actually show you how you can do it yourselves as well. And this is what we're showing you. Like, we've taught you everything you need to know. All the other teachings are foundations on how to get that daily bias, how to get the weekly bias, using the open interest and whatnot, and the weekly profiles. And then we're using the concepts of liquidity and the imbalances, and then we're putting that into a model together to then formulate these trades. And it's one of those things that there's like no other educator out there that shows you actually how to do it. We've given you something now in this call where you can go into the market and you can look for these things and you can start trading straight away. Now, whether that's with real money or not, that is up to you. We don't decide when you guys are ready to put real money into the markets. That's up to you what you do with that. Obviously, I'd recommend having some experience with it first, just trading it on maybe a demo account, just so you kind of know what it looks like and when it's forming, etc. And then once you've got the experience with the demo account or just watching it live, then you can maybe jump in with real money whenever you feel ready to and start trading this model.
Yeah, like there's only so much we can teach you guys. Like, we've taught you everything like we know and what to do. It's up to you guys though to go out there and put the work in now. And we've gave you the knowledge and the information. Now it's up to you guys, like, what you do with that, if you get what I mean. We want to see you guys showing how you're getting on with it in the group, obviously. And yeah, keep showing us the examples of it. And like back testing and stuff, to see how you're getting on. Any questions, guys? So just keep asking us. But yeah, really enjoyed teaching you guys.
Yeah, it's been good.
I don't know if there's any questions, guys. Say in the chat now.
If you guys have any questions, let me I'll stop sharing so I can see the chat. Yeah, do you guys have any questions about that model at all? Anything that doesn't make sense?
Yeah, always remember, guys, that's why that chat's there for, to ask us and share stuff, in it. We want to see how you guys getting on.
Yeah. And obviously this is the last call for the October group. Obviously you guys can, feel free to join in November as well.
Yeah, like if you're all paid, you can join all those calls as well.
Can I get the download of all the videos? So you should be in the Telegram, Thomas. It should be in the Telegram, and then you can just access the videos from there. Can I have a short video on SOP for a trade? Well, what does SOP mean? What do you mean by that? Standard operating procedure. So we've kind of gone over it in this call. Exactly what you should be looking for with this model. You're looking for the liquidity lining up with a 10, 20, 30 pip sweep into either an imbalance or an impulse block. And obviously you're trading the daily bias as well. Still a little confused about how to use open interest. Yes, that is the one teaching that everyone seems to stumble on. Yeah, that is the one people do get mixed up on. I would just recommend going over that call.
Just watch it back. Yeah, you've
Yeah,
got them calls. That's what they're for. And then of course, if you are still struggling, we are in the group to talk to.
yeah,
Appreciate all the info, you guys. In passing, thank you guys. Of course, yeah, guys. I really enjoyed it. That's what we want to do. We want to change all you guys' lives with the trading industry.
yeah,
We want as many people who's like anyone else who wants to learn, just send them our way. We want people to learn the actual like real stuff in the market.
yeah,
Like I wish we knew this stuff when we started and not what we learned, all that retail crap. Like we want to send people in the right direction straight away. But yeah, I think that's everything, guys.
Just for a little to do with that open interest thing you say about your stumbling on the open interest. What I'm gonna do, I've done it for the last group as well. We'll do it for you guys. I'm going to show you real like lifetime examples of when you should be plotting out the open interest. So when it comes to it, we'll show you, in the Discord. I'll put some pictures and I'll put a chat in at the time, and I'll show you like when the open interest is dropping and when we're switching over from the contract month and where you should be drawing the line on your chart from. So I'll show you that when it comes to it. That will be around about the 7th of December. So you still got around about a month until that time. But when it does come to it, again, I'll put it in the Discord. I'll show you how to use the open interest, and I'll be showing you it live as well. Now, obviously, bear in mind, we'll be going into December, so I wouldn't expect much of a move. We taught that in the open interest video. But then, yeah, when we go back in next year, again, we'll still show examples of this as well. So, we're here to help you guys even after the course are finished. We're still going to be in the Discord helping you with any lessons that you struggle on. We'll be there to help you and show you examples. But yeah, guys, I think that is it for this call. I hope you guys have enjoyed this mentorship. And yeah, thank you for watching.
Appreciate it, guys. Bye.